Long neck, ice cold beer never broke my heart. Like diamond rings and football teams, it tore this boy apart. Trading Devon Energy on the wheel of fortune. Oh, Vanna. Oh, Vanna, what do we have in store today on this episode of the Wheel of Fortune? We've got Devon Energy. You're always talking about that Devon Energy. I just like this stock. I like this company. I like Dollar Bills. I like their they have a basically a business model that is designed around turning their extra bills over to their shareholders. And guess who the shareholders are? That's me. That's right. I did have many more shares than this measly 400, but they were called away. They were called away at a profit a while back. And then I got back in on this, man, at average of $55.14. So it's been tumbling down today when the stock goes crumbling, tumbling, down. And we get excited, not because we want it to go down, just because we want to add to our position. So when we're looking at Devon Energy, and this also is a special shout out to one of my new best friends in stocks, options, and dividends. And he goes by the YouTube name of Rebel and a Trader, I believe it is. I should have wrote that down, right? Rebel and a Trader. He wanted to know what I look for and how do I find these stocks that pay the special dividend. Because when we look at Devon over here on Seeking Alpha, what it shows is this measly little 1.45% dividend, but and a 20%. But that's based on their fixed dividend. Okay, so when we come over here on Yahoo Finance, you see that their forward dividend is 6.3%. Now that's not a fixed number at all, because it is variable. They have their fixed rate that they pay. Let's go back to Seeking Alpha to look at it. They have their fixed rate that they pay of 20 cents per share per quarter, but then they return profit to their shareholders through these special, as shown here on Seeking Alpha, as other dividend. Okay, so you see they are already set up to pay on March 31st, they're going to pay me 89 cents a share. So both of these, 69 cents is the special / other dividend, and then their fixed quarterly of 20 cents. Now, that's a variable rate based on their profit, okay? But you see last year, I mean, they had this monster right here, and I was in on that, man. I had that $1.17 plus 18 cents right into my pocketbook. And I was able to buy Sparkle a nice Christmas gift with that. In fact, I shouldn't tell you this. She went on over to the jewelry store on the special, it was a special VIP day, and picked out her own Christmas gift. That way I always get it right. So she loved it. She loved what I got for her for Christmas, and Devon Energy helped me pay for that. Okay, so they are going to be paying on March 31st, 89 cents a share. Okay, we already have 400 shares, and I'm looking to add 300 more right now, and then we'll manage from there. But I'm looking to spin the wheel of fortune on this trade and try to get 3 times income, right, in 1 month. So we'll run the numbers on this and see where it stands, but we need to own these shares prior to 3/14. Okay, so today is, check the Swatch watch, it is Wednesday, March 8th. So no later than March 13th can we own this stock if we want to qualify for the 89 cents a share dividend that will be put into our pocketbooks on March 31st. So let's take a look. Let's take a look at it now. Let's take a look at the trade. Okay, there's no telling what it's going to do. It's going downtown to Chinatown today. It could keep tumbling, or it could bounce back up. So we're not even going to think about it. We're just going to buy our 300 shares right here and right now, okay? And we're going to get filled, and it's going to cost us it's going to cost us 54.14 average. Okay, so that's $16,241. 16,241.40. So that's what we just invested in those 300 shares, right? Now, we're only going to run the numbers on this particular Wheel of Fortune trade. So it'll only be on the 300 shares that we just bought, not the 400 we already have. We'll put that into a bigger spreadsheet because Devon is definitely a company that I think is going to be attractive to me all year long with regard to the wheel strategy. And again, remember, I'm looking for cash flow. I'm looking for predictable dollar bills into my sweet hands. So in order to do that, I need to make trades that essentially lock in those dollar bills. Now let's look at the trade. If we looked at trading a call right now, and we can't trade a call any sooner than after that ex-dividend date because we need to own that stock through the ex-dividend date so that we can be on record with the company as a shareholder and qualify for those sweet dollar bills. Now, so if we looked out, let's just look at some of the math. So if we looked out 9 days, and we looked at the $55 strike price. Well, why, if you think it's going up, why don't you be up here at 58? We have no idea if it's going up. We have absolutely no idea if it's going up or not. In fact, it's gone down since we bought it. It's down to 3 cents, so it could continue down today. There's the current stock price, 1 penny under what we paid per share. So we're going to be looking at a $55 strike price, which means if that Devon Energy does indeed rise up through that number, then those shares are called away at $55, regardless of how high it goes. I mean, it could go up to $60 a share, but we're still obligated to sell those to the other side of that contract. So whoever bought that contract, we have to sell them those shares at the $55. So that is the risk on our part, but I don't really see it as risk right now for what I'm trying to do with regard to capturing cash flow because, and again, I should preface the Wheel of Fortune trades, and I've renamed it from the Triple Nipple back to the Wheel of Fortune because Sparkle didn't like the name Triple Nipple. Because she is my sweetheart and she takes wonderful care of me, I try to honor her on most every request she ever has because she's my queen. She is my queen. She's my Caribbean queen, even though she's not Caribbean. But $55, what we're looking at. Let's look at, and I was looking at through March as far as what those dollar bills would look like. So we'd get 60 cents times 3. So that'd be $1.80, right? $1.80 times 100. So because we've got 3 contracts, 300 shares, so it'd be $180 that we would collect on that. Now, let's go to the 24th. So 16 days out. Now that same strike jumps all the way up to $92, right? So $92. I know what I'm saying, it sounds confusing from time to time. It's 92 cents, right? And it's times 300. Because that's how many shares it's in this contract. So we would put $276 in our pocket if we sold those covered calls right here at the 55 strike expiring March 24th. So now let's look out another week to the 23rd. Now we'd be at it just changed right before our very eyes. Right before our very eyes, it changed. Didn't you just see $1.50? I was like ready to fall out of my chair with excitement. So it'd be $1.22, okay, $1.22 per times the 300, carry the 1. That's $366 that we would put in our pocket. So let's just write that down, okay, $366 on this trade. And it would be let's see, 55 minus 54.14, which is what we pay. That's 86 cents a share, right? 86 cents. Over here, 86 cents. And we would multiply that by the 300. So we would make $258 in the share price appreciation between the 54.14 we paid and the $55 that we would sell for, right? And then we would also collect the sweet dividend. and the sweet dividend is 89 cents a share. So if we go back to the abacus and we plug in the 89 cents and we multiply that by the 300 shares in this example, that's another $267. Now, we take the 267 from the dividend, we add that to the 258 from the share price appreciation between now and that expiration date, if indeed it goes up to and through that strike price. And then we also add the $366 that we would receive from selling those 3 contracts, and that would be $891 bills, and that is basically fixed, because I would imagine Devon's going to go through 55 between now and the end of the month. I mean, gas only has to tick up a couple of pennies for Devon to be affected, because that's the other part or the downside of an asset like Devon Energy is it is volatile. It goes up and down, and all around. But we like the fundamentals. We like their cash. We like what our friends over here at Alpha Spread say. We'll look at that in a minute, but let's quick run the math again just to see what our return would be in less than 30 days, right? So we have $891 bills in our pocket. Then we would divide that by what our investment was today of $16,241.40, and that would be a 5.4% return in under 30 days. But if we rounded that conservatively to being able to do this trade 12 times a year, then we're at a 65. Why do I laugh every time? It's like those chiropractic videos I watch on YouTube. And when they get when the chiropractor cracks their neck and stuff, and it's a big crack, they always laugh. That's what I do every time when I see these returns. Because again, this is hypothetical. This is fantasy island, deplane type stuff. But it is viable, and we're going to be watching these, keeping all of this information in a spreadsheet to see how these trades go, and then we'll be determining on a monthly, quarterly, and then yearly basis what kind of returns were actually produced, because that's all that matters. It's just like the only thing that matters in cash flow is that the cash is flowing towards you and not away from you, like most people. Okay, and like I was early on in my adult life. So that's what we're looking at right there. Let's go back and see what. So Devon is up just a couple of pennies. It's still, so it's at 122 on this covered call, right? And it's covered because the coverage is we have the 300 shares that we're putting up on this options trade, and there's going to be a buyer on the other side, and they're going to pay us in order to have the right, but not the obligation. They'll have the right, but not the obligation to buy these shares at $55, because it could go up to the $55 strike price and they don't buy it. They don't have to buy it like I have to sell it, because I am obligated. Once I sell and collect this premium, I'm obligated to put those shares up at risk. So it's at $1.25 right now. Let's see if we can't try to fill it near that at the 3 contracts we just bought. So I think we might be able to get the 125, no problem. The 125 on these covered calls right here and right now. So those filled. So now that number goes from our original estimate of $366 to the reality of $375, right? Because that is in our pocket right now. And our risk is this. The risk is the stock goes up to and through the strike price. And then these are unrealized losses if we get that stock called away from us, because we've never had that money, right? Because I was going to preface this, and then my bouncy brain, of course, didn't finish my sentence, but these Wheel of Fortune trades are not for the FOMO crowd. So if you suffer big time from FOMO, the fear of missing out, then these are tough trades for you to wrap your mind around. And the psychology is a big part of trading, according to my very limited experience. But I'm pretty emotionally even keeled. I like to laugh and have a good time, and I get excited on the fun side, but I really don't get too emotional on the downside, because most everything, like my friends Leonard Skinner told me in one of my favorite songs of all time, Simple Man, this too shall pass, right? because trouble will come in life. It always does, but it also passes. Just like when I was suffering uh, emotional stress back in 2008 when the real estate market imploded on me, because that's my that was my career as real estate. It still is. I mean, I'm still in it, but I've been, semi-retired for the last several years. Um, but we're still in the real estate business. We do own several rental properties, owned a ton of them back in 2008, though. We had 115 rental units, and every single one of them was leveraged to the hilt with debt. So I was up to my eyeballs in debt, and I had a big house payment, had car payments, all that stuff, that big credit card debt, all those things were rolling at the same time. So I don't know why I'm getting off track, but it has part because I endured that. I lived through that. Sparkle and I, we got together and we said, look, we're going to fight this the best that we possibly can, which is let's try to outwork it. And I've found in my life that the harder I work, the luckier I get. So we never missed a single payment on any debt. And then it did change our life philosophy. So from that moment on, we decided to leverage down and out of debt. So we haven't had any personal debt in years. And we have currently we have 10 rental properties, and there's no debt on any of those. So all those dollar bills that the tenants pay go directly into our pocket, minus repairs, taxes, and insurance. So little backstory, little ditty about Bart Divvy. So where were we? Oh yeah, we're going to do some more math because we've got this locked in at 375, right? And we don't know if it's going to go up to 55 and those shares are called away. The stock could continue to go down. I mean, it could easily go down as easily as it can go up. We have no idea in this market right now, do we? If it goes down, then the risk becomes how far downtown to Chinatown does it go? That would then prevent us from selling more covered calls, but we want to be able to sell them above the price that we paid for them, which was $54.14 a share. Hopefully that my explanation of these things are making sense, because I certainly don't always make sense, not even to myself. So we collected $375 just now on that premium, right? And we are going to add to it our projected dividend collection. We like to have both hands out for dividend collection, plus the difference between what we paid, which was $54.14, and what it possibly and likely will sell for when these shares are called away at $55, which is 86 cents per share times 300. So if we add those dividends in, right, we add the dividends and the share price appreciation, we end up with $900 on the most likely, we call it potential profit here, but it's most likely is going to be the number that we receive between now and at the end of the month, March 31st, because Devon will pay us the dividend, and these will likely be called away at $55. And for me, I don't have the FOMO, so I could care less if it's at $60 at the time. I shouldn't say I could care less. I could possibly care less, but it doesn't really bother me. I don't suffer from FOMO. I'm on more of the LOMO side of things, the love of missing out. So like all those years that I drove my 2008 Jeep Grand Cherokee that I bought used, paid cash, and then drove it for nearly 12 years. And now Coco, Kid 2, is driving it right now as we speak. All those years that I drove that, while all my friends who made less money than me at the time were driving their fancy automobiles. Look at my Mercedes. My Mercedes, when they were doing that, and I was just smiling all the way to the bank with my no car payment on my vehicle. I called the GRFM, the Get Rich First Mobile, because money rule number 2 states, don't try to look rich, don't try to act rich, but, drum roll please, get rich first, then kind of do what you want to do, So that is a lot of rambling still. So $900, I'm just trying to have a conversation with you. $900 divided by the amount of money that we just invested real time here with $16,241.40 for what happened. You just messed that whole thing up. Let's do that again. It was $900, and let's divide it by 16,241.40, and then we end up with the 5.5% on the month, 5.54. And then if we hypothetically were able to do this trade 12 times a year, it would it happened again. Oh, it's like the silly chiropractic videos. I even tried not to laugh when I looked at the 66.4% potential annualized return. I mean, how would you not get giddy with that? Getting giddy with it with Bart Divvy. So that's what we have on the Wheel of Fortune trade. Now, one of the main reasons that I like to record these as I'm doing them is so that I can also share all of the mistakes that I make, right? So I'll show you, I think I published it this morning. It was called what was it called? The Castle of Love over time. It was called the Castle of Love, and it was on Crown Castle. And we did basically a Wheel of Fortune trade, and already, as you can see, it's not doing well on paper. But remember, we collected all those dollar bills from Crown Castle. We collected it by what did we collect? We collected $280, right, for that one contract that we sold, and it was on an asset that was down yesterday. So if we look back to yesterday, we thought that it was going up. We had no idea. We thought, let's go back to the asset. Let's go to Crown Castle. So you can see what they've done today. They're like, hello, Bart, you made the wrong move. And that's the FOMO. If we had FOMO, it'd be like, man, we could have just held that stock for what we paid, sold it today, and made several $100 bills, but we didn't. And it really doesn't affect me at all, because we're still going to be locked on, and you never know what Crown Castle is going to do between now and the expiration of that contract, which is next Friday. I mean, it could go back down, and then if we wanted, which was the original plan, was to roll out and up, but it may just be that we have to go with the 125, and they're going to be called away at that number. But we collected the sweet premium, and we're going to collect a sweet dividend as well. Is that correct? I believe it is. Let's make sure. Let's make sure that we're collecting that dividend next week. Let's go to dividend scorecard. That'll show us the ex-div date. So yes, we'll be locked in. We'll be locked in, and we have 100 shares, and that's what we'll collect, $157 bills. They'll pay that to us on March 31st. So we'll collect the 157 plus what we collected in that trade, which was, what did I say, 280? So 280. I mean, that's real money. And yeah, I'm losing on paper. If I would not have sold that covered call and just held this stock for one day, I would have made several $100s. But I had no idea how quickly and how much Crown would go up. We just thought it was going to go up, but we don't know. We have no idea, do we? So me and you, we're looking for that cash flow. So we got the cash flow guaranteed, but see, the difference would be in why it shows a loss. So why it shows, that it's a loss. So your total return, Bart, real good job. You're down 125%. I'm not really down that at all. It's just the value of this contract. If I wanted to get out of it, I would be paying $630 to get out of it. We're not going to do that. So all that dollar bills that we collected goes back into this trade, and that is actual cash flow. So we'll keep an eye on it in case it does try to trade down again between now and next Friday, and then we would consider rolling out and up. And this only trades once a month, so we'd have to go out until the third week of April. So the monthly options on any of the assets, the stocks, the underlying, whatever you want to call it, that trade monthly will always expire on the third week of the month. So that's when the most liquidity is also going to be available. So we also like to trade our weekly sometimes into that liquidity as well, because usually you're going to get a tighter bid and ask on the option contract, which we want. Okay, so where are we? If you tuned in on that credit spread we did this morning, we're already at almost 91% profit because we were at a 403 call and SPY is currently at 398.30. So unless things change dramatically, we are going to be real safe on that trade, which is where we want to be. And that's why, you know what, I wanted to get in on both sides of the trade, but I also didn't want to watch it all day like I had to do yesterday. That's just, you know, it's exciting, it's fun, but it's also, I'd rather be playing Xbox or, you know, watching um, spring training Cubs games. Cubs fan and a Green Bay Packers fan, just for the record. Put those into your record book as we become more and more friends. Man, this is like the longest video in history. You need to get out of here right now. So I want to get off of this to let you go. I got some more ideas to share today as we watch this market. We watch our sweet call credit spread. That'll put us at 5 for 5 this week. 5 trades, 5 winners this week. We see what else we have coming up. Now this Google call, so this is also what affects this number. So if you ever look at this number and you're like, man, his portfolio is going down all the time, it really isn't going down what it looks like, because what they do is they take money from me based on these negative trades. So all those show up essentially on my balance sheet for this total portfolio value. But we don't care. Remember, we don't care if this Google is called away, because we bought it at, like, one of them was at $91 and another was at around 94 between the 200 shares that are on the table at $95. So if they're called away, we make a profit. And remember, this is the wheel of fortune. So that money will be back into our pocket at a profit. And we had that premium we collected, and we'll just deploy them again into some Google puts, right? We'll sell some puts and we'll do the puts and calls and puts and calls, and we'll just keep doing that. And then the wheel of fortune comes into play when you do it on dividend stocks, and you're also able to stuff those dollars into your pocket. That's what we have. I'm almost 28 minutes into this, so I'll let you go. See you in the next video.